Options trading has become increasingly popular among beginner traders because investing apps, zero-commission brokers, and easy-to-use platforms have made the market more accessible. However, even though many people see options as a fast way to make money, they are not simple tools and are generally not ideal for beginners. An option is a contract that gives the buyer the right, but not the obligation, to buy or sell a stock at a price agreed on today. A contract that gives you the right to buy is called a call option, while a contract that gives you the right to sell is called a put option. To get this right, the buyer pays a premium, which is the cost of entering the trade. Options are usually used for three main purposes. The first is speculation. For example, if someone believes a stock will rise, they can buy a call option. If the stock rises enough, the option can produce a much larger return than buying the stock directly. But if the stock does not move or falls, the buyer can lose the entire premium. Put options work in the opposite direction. They are used when someone expects a stock to fall. The second use is generating income. Instead of buying options, investors can sell or write them and collect the premium. This can create cash flow, but it also comes with serious risk. If the trade moves against the seller, they may be forced to buy or sell shares at an unfavorable price. Selling uncovered or naked options can be especially dangerous because the potential losses can be very large. The third use is hedging risk. For example, if someone already owns shares and is worried the price might fall, they can buy a put option as a form of insurance. If the stock drops, the put can help protect their investment. But like any insurance, this protection has a cost. The main reason options attract traders is leverage. With options, a trader can control more exposure with less money and potentially earn much higher returns than they would from buying the stock itself. But this comes with a major catch. Options expire. If the expected price movement does not happen within a certain period of time, the option can become worthless. The main message of the video is that options are powerful but risky financial tools. They can be used for speculation, income, or protection, but they require a strong understanding before being used. For beginners, trading options without proper knowledge can look less like investing and more like gambling.